This is Rod Kusin Spooman for Risk On, October 18th, 2010, all times on the chart, our Central Standard Time. We're going to give you a quick review of our new Prem strategy performance for today, as well as some selected strategies. And we're going to start off just with a comment about our retracement lines. We've been mentioning this in some of our previous videos, that the way in which our system calculates retracements is based upon a very interesting formula that takes into consideration the S&P premium. And we're finding that these retracements are exceptionally accurate. The retracements, as you can see on this particular chart, where all we're drawing are just our retracements. We export this data live over to our trading charts, but they originate here. And each of these lines that you see are retracements that the indicator gave us, suggesting high probability returns to these price levels. Now there was the entire day. The accuracy of our retracements was 96%. And I suspect that before the morning, this retracement will get hit down here at 1170.75, making our accuracy for today 100%. Not bad. Okay. So the value of that information will be seen as we look at some of our trades. Now, one of the strategies that we had running looks at a combination of factors, including our proprietary premium reader, as well as stochastics. And we are going to be looking at crossovers on very fast stochastics, those three intervals, and overbought and oversold conditions using those parameters on this contract, plus a combination of overbought, oversold stochastics on one of our volume indicators. This will produce quite a few trades, but there is a bit more risk involved because it doesn't really take into consideration the overall trend. It's just looking more for a scalping opportunity. We really advise the best way to trade is with the trend, but this is more of a scalping opportunity. And we can see our first trades were short. That made some sense because we had a retracement line below the market. Of course, we had no idea that the market would rally all day long. Nevertheless, the first couple of trades managed to hit their profit target. But as you see these yellow dots here, when those yellow dots appear, this is what we call our warning signal. And the warning signal pops up to indicate to us that the market is coming against us, yet we're not looking at the ES to see that. We're looking at other market indicators to tell us that we may be looking at conditions that would cause the trade to get stopped out. So that would have told the trader take appropriate action so that he doesn't lose on that trade. Next set of trades is up here, and very shortly after getting into those trades, that white line appeared in addition to the warning signals. So holding that trade was really risky because, again, our indicators are telling us the market is going to go back up and test that level. And of course, you're in a short trade after that occurs, you're liable to get stopped out. We move a little further, and here's another example of a short trade. Those are just simply based on the parameters. Immediate warning, doesn't look good. And finally over here, we get a next set of trades, and that works quite well. We get some long trades in here at the bottom, and it was still pretty volatile, although we didn't get any indication that the trade was going to get stopped out. We did have some somewhat early entries in here. As the market moved up, we had a yellow bar here, and we paint the bars using another set of parameters that tell us when we have overbought and oversold conditions. But I'm not going to go into the details on that today. We had some additional long trades in here, a little premature here. These ultimately worked. Hit our profit target. We didn't get any other trades until the latter part of the day. We had a short here, didn't go anywhere. Again, we had a retracement line above the market, so very dangerous to hold that trade. Here, right at the top of the move around 2 o'clock, those trades worked nicely. Here was an oversold condition. The market went back up and then ultimately tanked. Oh my goodness, did it tank. Right there at the bell. So that was one strategy. So in this strategy, we're trading more with the trend. We're looking at a volume indicator on a fairly large tick bar interval, along with stochastics on some very fast ES intervals in conjunction with our premium reader. And we get a lot of long trades. Now, of course, when you're moving up in the when the move has gone up quite a bit, getting a long trade at the high of a move is pretty dangerous to take. But that's where the trade is pulled. Here, for example, is another one above these retracement bars. Don't want to take that kind of a trade. But here, where you're below retracement bars, that makes good sense. Here again, top of the move, retracement under, doesn't make sense to go long. Here's a little bit more of a this particular long trade right here. Higher risk because of the lower retracement. And then as we start moving up, we finally start seeing some short signals. So something is now changing, and we started getting a few short signals, and there was really quite a bit of whipsawing going on in here. But ultimately the long move prevailed, and up she went. Nothing to write home about with regard to that short trade, because again, it's below a retracement line. Here we're just getting in below a retracement. That makes some sense. And now at the top of the move, finally, we get these short trades, and down she goes. And in our last strategy, we're looking at a very specific setting for our overbought and oversold conditions. Here's our stochastic settings. Here are the two data feeds that we're placing that parameter on. Then we loosen that up a bit and use this interval along with our premium reader. And we plot all of the stochastics actually right on the screen here, just so that we have some sort of visual confirmation. But the fact remains, you really don't need it. You don't need it because everything is already calculated by the strategy. And we had a nice short trade right in here, hit a profit target, and nothing else happened until over here. And once again, we hit our profit target. So 2 trades for that strategy. So overall, it worked very, very well. And so we invite you to come to ask for a demo. Go to our website, give us a call. We'll talk a little bit more about what we're doing. And this is a very, very easy strategy to set up. It's very easy to set up. The learning curve is a couple of days, and you can get going with this strategy in very short order with very high probability trades, and our retracements are just unheard of. 96% accurate for today. Wow. And you can see we're about to go to 100 in the after hours market here. That's going to get hit. So there's nothing further to discuss at this time, so I'll wish you good trading, and this is Rod Kusin and Spooman for Risk.